Caterpillar announcing a major restructuring of its mining business. Here with details is Lou Whiteman, a senior writer for The Deal, with me now from Atlanta. So Lou, what is the latest and why is Caterpillar doing this?
Caterpillar is going to look for buyers or at least explore options for its soft rock business, which is, if you think about it, it's basically its coal business. This is a business that has been really struggling. Coal is losing to natural gas. It's losing because of environmental issues. There's not as much coal coming out of the ground, and there's just no money for coal miners, the ones that are still left, to buy new equipment. So this has really been a struggling business for Caterpillar, one of a lot of struggling businesses they've had due to the overall commodities rout of the last few years. It's been a difficult few years for them.
Well, and these units are tied to a 2010 acquisition that Caterpillar made, right?
Yes, the Bucharest deal, which in retrospect is looking worse and worse. This is the classic case of buying at the top. They bought the company for about $8 billion back in 2010 as to gain more exposure into mining when commodities were doing quite well. They're selling only a unit of it. This isn't the whole business, but they aren't likely to find a lot of buyers here. They're likely going to get a multiple that is well less of what they paid back in 2010.
Wow. So should investors take this as a sign that, Caterpillar isn't bullish on commodities? Because we have seen a pretty significant rebound in the past few months. So I think people might find this move by Caterpillar a little odd.
Things are definitely off the lows. I think what this says, if nothing else, is that Caterpillar is giving up hope on coal coming back anytime soon. They have said previously that they don't expect the overall business to turn around this year. Earlier in the year, they were hoping for, by the end of 2016, to see some signs of positive. Those hopes are basically gone. They're hoping for a 2017 recovery. I think what we're learning today is that it reinforces the idea that they don't think it's coming quick, and it also speaks to what they think coal's going to do and how long coal might take if it comes back at all.
And we saw the stock sort of rise just a little bit on the news. Any indication on what this means longer term for shares of Caterpillar?
Cat's been an interesting company the last few years because they both did this deal that is really hard with hindsight to justify. But they've also been very mindful of what's going on, and they've been very proactive about whether it's cutting costs, whether it's trying to use a buyback to keep the stock price from collapsing. They've also been very conservative, even with that buyback, and having a cash cushion to keep out of trouble. So this is a company that knows what they're doing. They have a lot of competitive advantages. They have global reach. They have the dealer network that is the envy of the industry. I think an investor can feel reassured that management continues to be proactive. They're not just sitting back. But at the same time, it's that deal is going to haunt them for a while because it's just getting harder and harder to justify as the quarters go on.
All right, we'll certainly be watching this. And of course, Lou, you have a great story on thestreet.com up right now about this. Lou Whiteman from The Deal, thank you for joining us.
Thank you.
I'm Scott Gamm, and you're watching The Street.